As you can see, 2016 was a strong year for us, with just over $60 million in sales and a gross profit of just under $32 million at our El Gallo gold mine in Mexico. These results were realized at the metal prices listed at the top of the slide. While both sales and gross profit decreased from the prior year, the sales and earnings both came in at our budgeted levels, as the grade profile declined as expected with the move to a new pit. We had a number of positives in 2016. It included an excellent start to the year with a very strong first quarter, above average grades throughout the year, consistent production through the rainy season during the third quarter, and significant improvements in our overall operating efficiencies. These factors resulted in the mine continuing to generate overall positive cash flows and allowed us to increase our investments in exploration in the district and further our project evaluation work at El Gallo Silver. The solid performance of Mexico was once again supported by the strong and consistent production at the San Jose mine in Argentina. In 2016, we saw the profitability of San Jose increase markedly, which was due to two main factors that came at the start of the year. The new government, removing the controls over their currency, allowed their peso to float freely against the US dollar and saw a devaluation of their peso. They also removed long contentious export taxes on precious metal exports. You can see here that these strong operational results exceeded our G&A, exploration, and development costs, which resulted in the company reporting a net income of $21 million, or 7 cents per share for the full year. Moving to the performance of the first quarter of this year, you can see that we have once again had a good start to our year in Mexico. Our gross margin was consistent when compared to the strong first quarter of last year. However, you notice quite strongly that the income from the San Jose mine was much lower than expected. This was due to a temporary delay in sales, which was due to a port which was damaged in a severe storm, which has since been repaired and sales have normalized. However, compared to the first quarter of 2016, this reduced income level appears quite drastic compared to the prior year, as the prior year was higher than expected due to the peso devaluation and removal of the export taxes I mentioned earlier. Going forward, we would expect to see the profitability of the San Jose mine increase and approach levels closer to the $8 to $10 million per year. Overall, this reduction in income from San Jose, combined with our increased investment levels at Los Azules, meant that we reported a loss of $3 million, or 1 cent per share, for the first quarter of this year. As I said, our strong operational performance has led to a growth in our cash balance, and that is just under $11 million increased over the year, as well as an increase of just over $7 million on our investments. Combined with the continued cash generation in Mexico, the San Jose mine was able to resume significant dividend payments to us in 2016, which saw them return approximately $18 million to us in the year, which compared to the prior year of only $500,000 of the entire year of 2015. I would like to mention that the company made the decision in 2016 to make a series of investments in junior mining equities during the year. Which have thus far performed quite well. And of course, any discussion of our balance sheet with Rob present would not be complete without me highlighting the fact that we remain debt-free. Keeping our balance sheet clean has allowed us to continue with our dividend payments, or properly our returns of capital, to our shareholders since we first initiated this plan back in 2015. I will now dive a bit deeper into our liquid assets. Our liquid assets, they consist of cash, doré, bullion, and equity investments. And as mentioned about our strong performance of the operations, resulted in a significant increase in this balance. This allowed the company to start to increase its investment levels in all of our assets. In the first quarter of this year, we returned to making significant investments at our Los Azules project by drilling there for the first time in 4 years. We have continued to fund the development work at our Gold Bar project as we advance towards construction at the end of this year. And we have also continued with our development work in Mexico, as well as the newly acquired Timmins projects. As I mentioned, earlier in 2016, we decided to redeploy a portion of our cash reserves and invest in junior gold equities. This came at a cost of just over $4 million to us in the year, and these investments now have grown to a value of approximately $15 million. Finally, I will now take you through the company's cash flows so as to provide an outlook for the remainder of this year. Firstly, on the left, I have the results for 2016, where you can see that the operational cash generation exceeded the outflows of our holding costs, including our dividend payments. You can also see that our exploration and development work did not exceed this operational cash flow, allowing the company to increase its cash balance to $37 million at the end of the year. Moving to the right-hand side of the slide, 2017, once again, our operations will still generate cash in excess of our holding costs. However, you can see that our planned increase in spending on asset development will exceed the cash generation and will require a good portion of our treasury. We will continue with our exploration and development programs in Nevada and Mexico, as well as at our newly acquired properties in Timmins. And of course, we have the expected outflows to fund the construction of Gold Bar towards the end of this year. Even with these investment levels increasing, we are projecting to end the year in a positive cash position, where we'll see the remaining portion, which we project will continue into 2018, at which point we'll see the remaining funding for Gold Bar be incurred in the first half of the year. On the whole, our operations are putting us in an excellent position and providing us with significant flexibility for the funding of our future growth.